While you sleep, your financial investments are still working. We are watching how your money is working for you, even when you sleep, because money never sleeps. Global Asset. Make your tomorrow a better day.
Welcome, and thank you for being here today. The meeting you are about to attend is based on the analysis of current market data. The forecasts that will be presented are not opinions, but probabilistic scenarios built on measurable price projections, quantitative metrics, and observable market structures. It is important to underline that financial markets are dynamic by nature, and that these data and scenarios may evolve and change throughout 2026 as market conditions, macroeconomic variables, liquidity, and capital flows develop over time. For this reason, Global Asset provides ongoing access to its analysts and to its proprietary analytical and execution systems, designed to continuously monitor the evolution of these projections and adapt strategies as market conditions change. Finally, it is essential to clarify that all content presented in this video is for informational and analytical purposes only. Nothing contained herein should be interpreted as investment advice, a recommendation, or a solicitation to engage in any investment activity. With this context in mind, we can now begin the analysis. What you are seeing today is not a storytelling exercise about the markets, but a concrete reading of the potential trajectories for 2026 on some of the major U.S. equities, where each scenario is already quantified in terms of maximum gain, average scenario, and potential risk. The goal is not to guess the future, but to understand how much an idea can be worth, how much it can deliver, and how much it can cost if the scenario does not unfold as expected. Let's start with Alphabet. On Google, the upper projection indicates a maximum potential of plus 41.56%, while the average scenario stands at around plus 9.44%. The defensive side of the fan shows a negative scenario down to dash 13.36%. This tells us that the stock offers an interesting return profile, but with a risk component that must be carefully managed if price remains compressed in the lower part of the range. Microsoft shows a significantly more robust structure. The maximum projection for 2026 reaches plus 54.35%, with an average scenario much higher than Google's, at plus 33.28%. The downside is contained, with a minimum projection of plus 4.49%, an element that makes the stock particularly attractive from a stability and gain continuity perspective. Amazon displays one of the widest projection ranges. The maximum scenario points to plus 61.97%, while the average scenario sits at plus 33.83%. Even in the most conservative case, the projection remains positive at plus 12.34%. Signaling a structure that maintains strong asymmetry in favor of returns. Meta Platforms is among the stocks with the highest potential. The upper projection indicates a possible plus 71.54%, while the average scenario stands at plus 28.64%. Downside risk is relatively contained, with a minimum projection of dash 6.54%, making the risk-reward profile particularly attractive over the medium to long term. Broadcom confirms a very solid dynamic. The maximum potential reaches plus 58.84%. The average scenario is plus 37.64%, and even the minimum scenario remains positive at plus 19.42%. This type of structure indicates a trajectory where risk is significantly compensated by the quality of expected returns. Tesla, on the other hand, shows a much more polarized range. The maximum scenario is limited to plus 25.29%, while the average scenario drops to dash 14.79%. The downside is extremely wide, with a minimum projection of dash 74.94%. an element that requires extremely selective and conscious risk management on this stock. Berkshire Hathaway presents a typically defensive structure. The maximum potential is plus 18.61%. The average scenario shrinks to plus 2.30%, while the downside remains contained at 6.81%. This is not a stock aimed at explosive gains, but at capital preservation within a broader portfolio. Eli Lilly shows one of the most interesting asymmetries in the group. The maximum projection indicates plus 53.23%, the average scenario plus 10.85%, while the negative scenario reaches 10.56%. This balance makes the stock particularly attractive from a strategic allocation perspective. Walmart confirms its defensive profile. The maximum potential is limited to plus 17.40%, with an average scenario of plus 5.00% and a contained risk at 7.53%. This is a stock that works more on stability than on the pursuit of high gains. We close this first block with JP Morgan. The maximum projection for 2026 reaches plus 18.99%. The average scenario stands at plus 5.32%, while the downside extends to 21.88%. The message here is clear. Potential returns exist, but with volatility that should not be underestimated. What emerges from this first group of assets is very simple but fundamental. Not all gains are equal, and above all, not all risks are acceptable in the same way. Global assets work is not to say this stock will go up, but to build a clear map of how much it can gain, how much it can lose, and where it makes sense to intervene in a structured way. In the next block, we will complete the picture with other assets, maintaining the same rigorous, numerical, and verifiable approach, because in 2026, it will not be those with the strongest convictions who win, but those with the best scenario management. Let's talk about Visa, where the projected scenario shows a maximum gain potential of plus 30.40%, with an average projection at plus 16.47%. The defensive side remains very contained, with a minimum that is practically neutral at plus 0.05%, highlighting a particularly balanced structure. On Oracle, the distribution of returns is among the most interesting in the entire basket. The maximum potential reaches plus 113.39%, while the average projection stands at plus 58.82%. Even in the most cautious scenario, estimated risk remains limited at 7.80%, outlining one of the strongest asymmetries. MasterCard presents a solid and progressive scenario, with a projected maximum gain of plus 35.60% and an average of plus 16.54%. The minimum remains positive at plus 7.32%, signaling a structure that maintains a favorable direction even under conservative assumptions. On Johnson & Johnson, the setup is more defensive. The maximum potential is plus 14.43%, with a modest average of plus 1.26%. The minimum drops to 14.93%, showing a less aggressive configuration consistent with the stock's historically stable profile. ExxonMobil offers a balanced projection between gains and risk. The estimated maximum is plus 37.71%. The average stands at plus 14.77%, while the minimum falls to 8.82%, shaping a well-defined scenario also within the energy sector. Moving to Palantir, a much more dispersed structure emerges. The maximum potential is plus 37.90%, but the average projection is limited to plus 2.43%, with a particularly deep minimum at 71.27%. This highlights an asset where the risk-reward balance requires extremely selective management. On Netflix, the scenario is clearly more constructive. The maximum gain reaches plus 62.08%, with an already very significant average at plus 38.16%. The minimum remains contained at 3.35%, indicating a decidedly favorable probability structure. Bank of America shows a more moderate but orderly projection. The maximum is plus 24.04%, the average plus 7.95%, while the minimum is limited to 4.21%, outlining a more linear and less volatile profile. On AbbVie, the distribution of returns is wide but well defined. The maximum potential stands at plus 47.52%, the average at plus 12.49%, with a minimum at dash 10.75%, offering an interesting combination of growth and risk control. We close with Costco, where the scenario highlights a maximum of plus 40.77%, an average of plus 21.81%, and a minimum at dash 13.06%, a structure that reflects solidity, but with oscillation margins that must be carefully considered. These projections clearly show how, behind seemingly similar numbers, deeply different risk and gain profiles are hidden. It is precisely in reading these asymmetries that Global Asset builds strategies oriented toward return quality, not simple market exposure. If we put all these scenarios together, the picture that emerges goes beyond individual stocks and clearly tells how the main market sectors are evolving. The digital payments and financial infrastructure sector, represented by Visa and MasterCard, shows orderly structures, solid average gains, and a strong ability to absorb conservative scenarios. Here, strength lies not in explosiveness, but in continuity and stability of projections. The technology and software sector, with Oracle, Netflix, and partly Palantir, shows a much wider dispersion of outcomes. Alongside very high gain projections, clear differences in risk distribution emerge. It is a sector where potential exists, but selection becomes decisive. Not all opportunities have the same structural quality. The healthcare area, with Johnson & Johnson and AbbVie, confirms its role as a stabilizer. Projections are less aggressive, but they offer a balancing function within a broader view, especially when markets enter phases of transition or uncertainty. The energy sector, represented by ExxonMobil, shows an intermediate configuration, solid gain margins accompanied by measured risk scenarios, typical of a cyclical sector that remains central to global balances. Finally, consumer defensive and quality retail, with Costco and Bank of America on the traditional financial side, highlight how solidity and risk management remain key elements even in complex market environments, with projections favoring the sustainability of gains over time. Overall, what emerges is not a uniform market, but a set of sectors moving at different speeds and according to different logics. It is precisely this difference in behavior that makes a selective and structured approach indispensable, one capable of reading not only the potential for gains, but above all the quality of that potential. It is on this cross-sector vision, integrating assets and industries, that Global Asset builds its strategies. With this overview, today's meeting comes to a close. The objective is not to predict, but to understand, to observe the structures, proportions, and dynamics that are taking shape. Thank you sincerely for following this analysis to the end. I wish you a clear, balanced, and rewarding 2026, with markets able to offer opportunities to those who approach them with method, patience, and vision. Happy 2026.